doing this YouTube thing, so. Okay, we're going to get started with Technical Analysis Basics 101. And I go by the name Mountaineer on the DataDash Community. My real name is Brian, for anybody that cares. Let me open up a quick agenda for our... Can you see that on your screen?
Yep.
Yes.
Okay, very good. One of the things I want to get through today is just general basics in setting up your charts when you're getting started with charting and using a system like TradingView has. So I want to go into a TradingView chart and start looking at it. And then I want to take a look at how to interpret some of the price information you're looking at, and how to switch between candles and lines and bars and some of the other types of price indicators that you have. We'll look at volume and how you can compare that with the price action that you're seeing, because I think you can get a lot from the type of volume information that you're getting. We're going to incorporate some moving averages and the MACD indicator, which is the moving average convergence divergence indicator. So the two work together, the moving averages and the MACD work together. And then we're going to get into what I think is pretty important and real. What I'd like everybody to take away from here is the drawing of the support and resistance lines, drawing the trend lines, and then we'll get into a little bit of using the triangle tool and the channel tool. So let's get started. I got to figure out how to flip over to my switch my screen application over to TradingView. Okay. So you should be seeing a TradingView chart at this time.
Yes.
Okay, and I've just chosen for the purpose of demonstration, I've chosen the chart of Ethereum versus the US dollar. The reason I chose this chart is it has a lot of the aspects that we want to cover, and it's also one that I think a lot of people are somewhat familiar with. I've chosen the market of Coinbase, since a lot of people use Coinbase to get in and out of the market. So we'll look at the price of Ether on Coinbase in US dollars. Of course, this analysis applies to any chart you're looking at, so I just picked one. So just a real basic getting around your TradingView chart. First thing I'm going to do is go full screen here just to get rid of anything else on the screen. Up at the top, you've got the actual security or commodity that you're looking at. So if you want to change between your security commodity that you're looking at, you would type it in up here. So if I wanted to look up Bitcoin, I would just type in BTC. And if I wanted to look at it versus the euro, I would say EUR, and then I would find the particular market down here. So that's how you're going to switch between from one coin or a token to the next in TradingView. I have noticed lately that TradingView has been picking up a lot of more coins than they used to carry. So they're obviously getting the message that the crypto world is using their tools. So it looks like they're starting to add quite a few more coins into their database, which is great to see. Also, along the top here, you can change the amount of time frame that you're looking at. So in this case here, we're looking at 1 day. So every single candle and every single volume indicator here is 1 day. I can switch that to be 1 week. And then you can see here that we're looking at a weekly chart, which we will be doing later when we start drawing support and resistance. I always like to start out larger, like at weeks, and then move in from there. We can also go into an hour, a 1 hour chart. And so now we're looking at hourly data, okay? So that's up here. I'm gonna flip back to daily for right now. Here we can switch the type of information we're looking at. And I do this quite a bit actually, and I'm gonna show you when we start drawing support and resistance that I switch between bars, candles, and lines. Those are about the 3 that I use. And I'll show you how I use them a little bit later on, but we'll go back to candles for right now. Your general settings here, I actually prefer sometimes to go to dark mode. But I don't know what I just did there. I did something dark. Yes. So I like to look at things in dark mode a lot. Some people like it in light mode. I guess it just matters what looks good on your screen and what works for your own eyes. What looks good on your screens right now for this Google Hangout? Does the white or the black look better?
The dark is easier on me. I'm used to it.
Yeah, that's fine. We'll leave it here. We'll leave it in black mode. That's fine. Okay. The rest of them up here we're going to get to a little bit later, including a brand new one, which I think is fantastic. They have this one called Bar Replay. I love that. We'll get into that in a minute. So that's a little bit of getting around. On the left-hand side of your trading view is some of your tools that you're going to use for drawing. And obviously on the right-hand side over here is your actual price levels. And down at the bottom is your volume and your prices. So generally when you open up a chart for the first time, this is what you're going to get. You're going to get your prices and you're going to get your volumes. So when we look at a particular candle, again, we're looking at a daily. We know that because it's got a 1D up here. And you can also tell that by looking at the name ETHUSD, comma D for daily. That changes when you change it to an hour. That'll change right there. So you can see what you're looking at. If we look at a particular candle, and I'll just zoom in here to make it a little bit easier to look at a candle, and we'll just pick on this one right here. What we're looking at is the very lowest point, which is right here, the very lowest point of that day or that time period, the very highest point of that time period. So that's the very lowest part of the wick and the very highest part of the wick. And then you're looking at the body of the candle. And the body of the candle will represent the opening price of that day and the closing price of that day. So what we gain from this is some information about how the market is moving, the bulls and the bears, and the buyers and the sellers, how they're pushing things. So on this particular day, the price opened right here. It moved backwards a little bit. It's kind of hard to see on the screen, but it did move backwards a little bit. Then the bulls pushed it forward up to a certain point here, and then the bears pushed it back a little bit, and then it closed here. So in the end of the day, the bulls won the day. So the candles give you a nice picture of kind of who's winning the great struggle, the buyers or the sellers, the bulls or the bears. And the close and open determine the shape of your body. Now, when you have a very interesting candle, such as this one right here, this is called, it has a name, it's called a doji, D-O-J-I. And the doji is a particular candle with a long wick on either end and a very, very small body. And that indicates that there is indecision in the marketplace. The market has gone down, the market has gone up, but in the end, it closed basically around the same price that it opened that day. And a doji is something that you can use to indicate that the market isn't quite sure which way it wants to go. So as you get to study candles a little bit further, and you might hear some people talking about candles, that's one of the indicators that you might have some indecision in the marketplace, and the market might be deciding whether or not it's going to change direction. In this case here, the market was heading down, it had some indecision, it fought back and forth, and then it decided to turn the other way. And that happens a lot with dojis, is that in the end, the market decides to turn the other way. So that's a little bit about candles. Now, volume, I think, is extremely important. volume goes right hand in hand with what you're seeing in the price action. And what we see down here is the amount of dollars and spent that day in buying and selling, the number of transactions that occurred during the day. So if we see a very high number of transactions, a high bar, we know that there was a great amount of interest that particular day. And we can also usually line up that day with high interest with some sort of pretty significant movement. As we can see here, we have two very high volume days, and those days were corresponded to pretty large movements in price. And we also see usually that on low volume days, there probably wasn't a whole lot going on. The market kind of just was sitting back and waiting to see. The buyers and sellers were in a little bit of an equilibrium. The sellers weren't that interested in selling. The buyers weren't that interested in buying. Everybody was waiting to see what was going to happen next. And you can see the volume is kind of low on that particular day. And when you start to look at consolidation patterns, which is when a market is deciding where it's going to go, you will see, and we'll talk about later when we look at trends and maybe wedges, you'll see that the volume will start to drop off during a consolidation pattern or during a sideways pattern, because the buyers and sellers are starting to decide, or still haven't decided which way they want to go. Everybody's kind of sitting on the sidelines and waiting. Once a path has been decided, or once a number of buyers or a number of sellers come into the market and start to push the price in a particular direction, all those other people that were sitting on the sidelines over here, they start to jump in, and you see the volume start to play, and the volume starts to push up and up, and all of a sudden the things really wake up here, and everybody that was on the sidelines says, oh, I'm getting off the sidelines now, I'm in. And the volume starts jumping up like crazy. So that's how you really can start to interpret volume with price. Normally, you're going to see very high volume days on what would be kind of a volatile day. Here's a doji. We already talked about the doji day. And the doji itself is actually a little bit obscured right now by the current price line. But that was a pretty high volume day. The day before that was pretty high volume as well. And you can see the wick on that day is very high. So the low and the high for that day was quite large, and we had a lot of trading volume. Any questions on candles and volume?
No, that was clear. Real quick, though, on the bottom right there, is that a live feed into the order book, the current orders?
In this case, it is. Yeah, that actually floats around. In my case, I think it starts up here when you first open up TradingView, and I think I had at one point just shifted it down there. But yes, that is a live look at the buy and sell. And I haven't played with that much because I actually use Coinigy quite a bit. So you have a little bit better look into the market. But yes, that's exactly what that is.
Okay, thank you.
Go ahead.
I have a question. Sorry. Well, this last candle you have there, it's forming, but if it closes like that, would it be considered a doji as well?
Yes, that is correct. So anytime you see the wick is longer than the body itself, then that's pretty much a doji. Yeah, and I'm not a candle expert, so I don't know the, I'm sure that there's a mathematical formula to know exactly what a doji is, but yes, that right there is going to qualify as a doji if it closed right there.
All right.
And you can see that's basically market indecision. The market has, the bears pushed it this way, the bulls pushed it this way, and they're still fighting it out, but they've only just kind of, they've ended basically right where they started. So the market is undecided right now what to do. And what's happening today? Well, Bitcoin is skyrocketing, and the people that own Ether, they're deciding, is Ether still worth this much money in US dollars? So far, their decision is yes, Ether is still worth $433 no matter what Bitcoin is doing. And I think that's a good sign for Ether. It's holding its price even though Bitcoin is going up. So that's just a real basic getting started. But at this point, what I want to do is I want to start throwing some indicators on our chart. So I'm going to zoom back out. All I'm doing is scrolling with my mouse wheel. You can also do the same thing by, I think, yeah, if you click down at the bottom on the bottom here, the x-axis, you can scroll, click and hold. You can scroll back and forth too. But I'm just doing it with my mouse wheel, scrolling in and out with my mouse wheel, and you can kind of get a zoom out or zoom in on your picture. Same thing works with your prices. You can grab your prices on the right-hand side with your mouse, click and hold, and then you can move them up and down. I haven't figured out how to do that with my mouse, so I just scroll out with my mouse like that, and then I'll slide up like this to kind of zoom in. The other nice little feature down here on this very bottom right corner is a little auto, and it'll auto scale for you based on the time frame. Now, if I zoomed out here, I've got the auto on right now, so it's going to just constantly reformat my prices based on what I'm looking at. So if you ever open up a chart and you don't see anything, you just come down and click that little auto button, and usually your prices will show right up. It just sets your scales for you automatically. Now we're going to add a couple indicators, and so up here at the very top is where you find your indicators. Okay, and we have basically some standard ones here, but I usually just click on the word indicators. Whoops, there we go. And I just type into the search bar what I'm looking for. So in this case here, the most basic and ones that we really definitely need to start with are moving averages. So we'll just type in moving average, and we're just going to pick the really, the most basic moving average right there. And I'm actually going to add 3 moving averages for right now. So I'm going to click it again. So you can see I added one and then a second one, and I'll add a third one for right now. And there's another indicator that I'm going to add right now, and that's going to be MACD. MACD. So I type that into there, and the very first one is MACD right there. Uh-oh. I only have, this is the free version of TradingView, so it's going to say I can only do 3 indicators. So I'm going to have to take one of my moving averages off, which is fine. And I'm going to come up here and type in MACD. Again, I get MACD.
There are some custom indicators that would plot like more than one moving average at a time.
Yes, that's a great point. So if we go up to indicators and I type in MA, you'll see that you see built-ins, and those are the basic out-of-the-box built-in indicators. And then you come down here to public library, and people have written code for their own version of different indicators. And in fact, I'm going to type moving average. And I'm not sure which one it is. I haven't played with them enough. But you have to come down and kind of choose some of these and play with them. Sometimes you can look at the likes, and some of the very high likes ones, the ones with a lot of likes next to it, are usually pretty good. And you can pop them on there and see what they do. You can always click the little X to get rid of them if you don't like it. That's how you can kind of test out what is, some of the different tools, indicators that people have come up with. You're correct, though. In here somewhere, people have come up with one indicator that will give you several moving averages at the same time. That way you're not using up your free number of indicators. But for right now, for the purpose of our workshop here, I'm just going to put these 2 up here. Now, we actually have 2 moving averages, but they're right over the top of each other, so it only looks like one line on our chart. When we come up here, we can click on the little format button, and we'll get a pop-up box. And the first thing it says is, do you want to change the style? So you can change the color. So I might want to change that particular indicator to red, and I might want to make the line. I might want to make the line a little bit thicker, so I can make the line really nice and big and thick if I want, or I can make it thin. I would suggest do not play with the scale because the line will just go flying off the page. You won't know where it went. And then over on inputs, this is what you want to do. You want to change this one to 21. We want a 21-day moving average. So you can see up here we have a moving average. We have a 21-day moving average, and it's using the close price. So we talked about the candles. The candles have an open price, a close price, and a high and a low. It's using just the close price as its calculation for 21-day moving average. And then the second indicator, the second moving average, I'm going to edit, and I'm going to change that to a 50-day. And I might change the style. Blue's pretty good. I'll leave the color, but I might make it just a little bit thicker so we can see it. So now we have two moving averages. All they are doing is taking the last number of periods and averaging them. Okay, it's not very difficult math. It's going to smooth out your price actions over time. But these can be very important because what they are doing is they are showing you where the market equilibrium is. The longer you make your moving average time frame, you can change this to 100 days, you can change it to 200 days. The longer you make that time frame, the smoother your line becomes and the more you get a picture of where true equilibrium is. But at the same time, you also don't want to make it so long that you can't get a picture of where the general trend is going. So you can see that our 21-day is giving us a picture of trend most recently by going up, whereas our 50-day, it takes a little bit longer to make that turn, okay? Now, the interesting thing about moving averages is that they kind of act like a magnet. When price starts to get away from them, as it did here, the market has a tendency to make its way back because they do indicate a level of where the market is in more equilibrium. So the market is not quite in very much in a great amount of equilibrium when it's this far away from where its average should be. And it's even in more equilibrium when it's closer to its 50-day. So when we see this type of price action and we see the price start to get away from the moving average, we get very excited and we start thinking about maybe jumping in and buying this particular coin. We have to be aware that the risk is the farther we get away from our market equilibrium, from our moving average, the more risk we have that it's going to turn around and start making its way back to market equilibrium. The market generally is going to follow market equilibrium. Now, that doesn't always apply to Bitcoin, by the way. Bitcoin is totally irrational, and doing this type of work on Bitcoin is a challenging process. So that's why I'm not doing Bitcoin for our tutorial here, because that can be challenging. I haven't figured that one out yet. That coin is tough. But this one, acts a little more normal, if you will. You will also see that the moving averages are going to act like support and resistance. So if I zoom in just a little bit here, you can see back in time that our price tends to want to stay on that line and use that line. When it breaks through that line, the 21-day, it'll find that 50-day and use that 50-day as support and resistance. So our first level in this workshop of finding some support and resistance comes with the moving averages. Price generally wants to find those moving averages. When you hear people say buy the dips, or wait for the price pullback, a lot of times what's happening here is you get a run up and then you get the price start to float back towards market equilibrium. And people will look for that. And if you feel confident in the future of this particular coin, you might say when it gets close to or when it touches the 21-day, that's my buy point. So this might be your entry point at this point, because you feel like, okay, the market got excited. The market then started to, these people down here made some money. They've sold off a little bit, and it's kind of floated down nicely. It's going to touch that 21-day. It's going to be back more into equilibrium with the market, with the marketplace, and that's my buy point right there. You could also, if you felt like this was had some more risk to it, you could wait and see. If you wanted to wait, you could wait to see if it made it all the way down to the 50-day, which would be another point of market equilibrium. So moving averages are fantastic tools for you to start looking at buy points. They're going to act like support and resistance, and they're also going to act like potential sell points. If you bought down here and you saw the price go up, and then you saw it start to falter, move sideways, you might decide that if it breaks through the 21-day and it settles below the 21-day and it can't quite hang on and it closes down here below 21-day, that's my indication that it's not holding on to that market equilibrium. It might be turning. That's my sell point. So you can use the moving averages as buy indicators and sell indicators. If the coin holds support at the 21-day, let's zoom into what's happening right now. We are still holding above the 21-day. Yeah, we dipped below. You can see that we dipped below here, but it came back up quickly. We can watch this throughout the day, and if it settles in above this 21-day, then the 21-day held support. That's a good sign, but we're still going to keep an eye on it. If we own this particular, if we own this coin, we might be worried that if it then closes below the 21-day tomorrow and starts to lose that support, you could start seeing it drop off quite quickly. We might decide that we've lost faith and we're going to sell. So that's how you would use the moving averages. Any questions on the moving averages?
So the moving averages, they're a sum of the previous candle intervals, whatever you have selected, right? Days or minutes or hours or weeks.
That is correct, and thank you for bringing that up. When you change your time frame, so I'm on days right now. This is a 21-day moving average, and this one is a 50-day moving average. Now I'm going to change to hour. I'll hit auto here to make it look better. Now our moving averages are based on our time frame. These are now the red one is a 21-hour moving average, and the blue one is a 50-hour moving average. Okay. As you go down to smaller and smaller time frames, your indicators become less and less strong, or they become weaker, less reliable. Your price on an hourly basis is much more likely to break through your indicators in any given minute or hour than it is on a day or a week. So if you can find some trends that are occurring on a weekly basis or on a daily basis, those are going to be pretty strong trends. If you can find trends that are occurring on a 1-hour time frame or a 15-minute time frame, those trends are very weak trends. So trying to catch a deal and maybe day trading on a 15-minute time frame or a 1-hour time frame can be very risky, because those particular indicators should be considered very weak because they're not long-term. They're only 15-minute or 1-hour intervals. Does that make sense?
Yeah. Can you talk about that a little bit, about the intervals that you might normally use when you're using this as a tool to make decisions? Like, is your daily what you normally use? Or it seems in crypto, they move so much more quickly than the regular stock market that maybe day is, too long, maybe hour or so. Or is that getting too narrow that the indicators don't matter at all?
Well, this is my philosophy. Everybody's got their own philosophy, okay? And I'm not a day trader. I have a day job, so I can't sit here and do this all day long. But here's my philosophy. Number one, I start everything at the daily. Okay, this is where I want to see what's going on. So as far as I'm concerned, the daily chart is the king of charts in terms of understanding really what's happening to a particular coin or stock or security. Now, when I want to understand an entry point, let's say or an exit point, I want to understand what the particular behavior is occurring that particular day. I'm going to look at two different time frames, and that's going to be the 4 hour and the 1 hour. The 4 hour, for some reason, I don't know why, but 4 hour is a very good time frame to look at for seeing how a particular security is behaving that particular day. In this case here, we can see that in the 4 hour chart, the 21 moving average, so that's 21 4 hours, 21 units of 4 hours. The 21 moving average really behaves nicely. Okay, we can see that it's really holding that 21 day nice. Pops up, comes over, touches it, really behaves nice. Then we can see, wham, it slams right through. Zoom in a little bit here. Look what happens right here. Okay, it's holding that 21 day. Now it's starting to have some problems. It slipped below the 21 moving average. So that's 21 4 hour moving average. Slip below. Uh-oh, we're starting to get a little concerned if we're kind of watching the intraday here, the 4 hour. And what's going on with volume? No, volume's not too bad. Maybe it's not too bad. Oh, we see the buyers perked back up. We see a volume spike right here, and it pushed that price back up above the 21 moving average. That's good. That's a good sign. All right, good. Sellers were less than buyers. That's good. Wow, buyers really dropped off here, but the price went up. That's not a great sign. You want to see volume go up when price goes up. And here we have a significant drop off in the buyer volume, but yet the price went up. That's starting to feel shaky. Now we see the price really skyrocket. Look, it went all the way up here to 518. High amounts of volume. Really good. Starting to feel pretty good about this, but what happened? The bears, they came in, the sellers came in and pushed it all the way back. And then the hammer dropped right down, but it found its support at the 50 moving average. Then things got really kind of volatile. Volume is up, things are volatile, buyers and sellers are trying to figure out what's going on. It found some footing. Don't know where this footing is right now. We might have to look at a different chart to figure out why it found footing right there. It's not on this chart, but then it climbed back up, and now it's back onto its moving averages. So I like the 4 hour.
What did you mean? I'm sorry to interrupt. What did you mean when you said it's a little shaky? The price is up, but the volume is real low. What did you mean by it's a little shaky? Did you mean like it's being manipulated, maybe, or? No. When you see volume is low, and you see price moving, that's an indication that something is not correct in the market. Now, I don't mean not correct in meaning that there's manipulation. What I mean is, if you see volume up, if you see volume is down but price is moving, then what's going on? Let's think through it. The volume, the sellers are backing away. So this particular, I'm going to zoom in a little bit just to make this. We're looking at this particular candle right here. This is a 4 hour candle, so we have to remember that this isn't a whole day or anything like that. But this is a 4 hour candle.
where basically the sellers just backed away. I mean, there was no real buyers. There was just a few buyers coming in, and they were snapping up, you know, what was available, but the sellers just backed away. That's why the price went up, is because there really wasn't a whole lot of transactions going on. It wasn't because the buyers were pushing it. It was because the sellers were just not selling. Now, you want to see price move because buyers are pushing the price forward. You don't want to see it because the sellers are backing away. If the sellers are backing away, they're building a bull trap. So imagine a seller who is basically saying to, you know, it's kind of like, you know, trapping an animal. You're just trying to coax them in. You're backing away. And as soon as they get to where you want, bam, you slam the trap down on them. And that's really what's happening here. The sellers are backing away. There's no real buyer activity really pushing anything up. So the sellers are just waiting for their moment. They got their moment in the next candle. The buyers started getting excited. They started pushing it up, and the seller said, "Gotcha." And they grabbed them and they pushed them right down. So what you're seeing is, what in the volume is market behavior. And you got to kind of think through it. Why am I seeing volume very low, but my price is moving, especially crossing a moving average? If you see price moving across the moving average, you want to see some pretty good volume behind it. Does that make sense?
Yeah,
No?
yeah, exactly. No, thank you. That was very clear. So you're talking about there in this set of 3 candles, you're saying that you had a bunch of sellers, and then they moved away. The buyers came in, and those sellers were kind of waiting for the price to go up so they could get the best price possible before they would sell. And that's what that big red candle is.
Yeah. And what I'm saying is right about here, the sellers started to say, wait a minute, I've got a bunch of buyers willing to pay a little bit more. So the sellers started backing away. There really was, you know, just a few buyers in the market at that point. You can see the volume is almost nothing. The sellers are just backing away, and then they're backing away further and further, and the buyers start chasing them. And that's when they dropped the hammer, and they said, okay, I'm going to take your money now. The market just loves taking your money.
And the numbers that are up to the top left next to the volume indicator, when you roll over a volume column there, those are the actual numbers of the volume at that area? So like there it says 19K.
Yes. So $19,000 worth of Ether traded in that period, and the number next to it is 34K. That's your average. So your average is let's take a look at the volume right here. If I click on the format button for my inputs, I have a moving average of my volume. It's a 20 moving average. So it's 20 days or 20 periods. In this case, it's 24-hour periods moving average. And that's this line right here that's going through our volume. So my average is 34. You can see that that's this orange number. My average is 34, but my actual for that period was only 19. So we're way under average.
Great, thank you. That was great. Thank you.
Mm-hmm. So what we have now is an opportunity, because we know how these particular moving averages are important. Oh, I wanted to quickly wrap up by saying, once we go to the 1 hour, this is where we are really getting into looking at, you know, behavior. This is the only time I really like to look at 1 hour is when I'm setting up a trade, and I just want to see, you know, is everything look stable right now for making a trade? I mean, are we in a stable position? Like right now, literally right now for this particular Ether, that's not a terribly stable position. I mean, if I was going to jump in right now to buy or you know, or sell, I would know that I'm going to be fighting, you know, some prices that are popping back and forth. I would much rather be buying or selling like here, where prices are much more kind of predictable and stable. Here, things are kind of erratic, so you're going to have a harder time jumping in and jumping out. You're gonna have to kind of chase the market. Versus here, you're not going to have to chase the market. You can just set your limit order and let it happen. So that's when I use the 1 hour. I'm not a day trader. Day traders love to use 1 hours and 15 minutes and all that. I prefer to look at the market from a little bit, you know, bigger perspective. So that's why I go back to the daily. Now, there's another part of the moving averages which is very important, and that is when they cross. And the reason is because the moving averages are different time frames. So when a 21-day, which is going to move faster than a 50-day, in this case I'm on daily now, so I can call it a 21-day and a 50-day. When they cross each other, that's kind of indicating to you that the market has shifted from going one direction to another. And it's obviously a very late indication. The market shifted way back here, but our 21-day didn't actually cross until over here. That being said, we can look at it for what it's worth in terms of understanding where we are in terms of market equilibrium. If you look at this as a general, not looking at one individual point, but if you look at this entire area here, like that space there, sorry. Now I can't get this thing to go away. There we go. We have our 21-day is kind of meandering back and forth across our 50-day. And so that tells us that our market is sort of in a period of moving more consolidation, moving across itself. And in fact, that's what happened. If you look, there's not a whole lot of price change from here to here. It goes up, it goes down, but it's really moving sideways. And our 21-day is kind of crossing back and forth. Our moving average convergence divergence down here is really measuring something pretty much the same. Now what it's doing is it's going to measure the distance between how your moving averages are behaving, but it's doing it at a different time frame than what you're using up above. Up here we're using 21-day and 50-day. The standard settings for MACD are going to be 12 days or 12 periods, 26 periods, and then a 9-period signal. Okay. So in this case here, if I bring that back up here again, our signal is orange. Our up and down histogram is red, and our actual MACD is blue, okay? So what we're looking for is when does our MACD, our blue, when does our moving average cross our signal? And what that means is when does our moving average start to indicate that there is a change occurring in the marketplace? In this case, MACD is indicating that we are in a position that is not so good for Ether. Now we can see that over the course of the last several days or a couple weeks, the price has started to come back down, and you can see that our moving average has come back down, but it has also crossed our signal. And a lot of people will look at MACD and say that that is going to line up with that's a sell signal. When our MACD, when our blue line in this case, our MACD line crosses over our signal line, that is a sell signal. Now, conveniently, what they do is they take this histogram here and they plot it going over under zero. So here our histogram is above zero, and then all of a sudden here it dips below zero. And so if you see a histogram go below zero, that is, for a lot of people, a signal to sell. Conversely, they will use the opposite. When our MACD goes up above our signal line, like right here, that's a buy signal. In this case, had you bought on this signal, you would have bought at around $280. And you might have potentially sold here if you wanted to stick with the MACD completely. You would have sold at about $311. Not bad. You made about $30 on that trade. and then you would have maybe bought again when the MACD crossed. It's kind of hard to see. We can also play with the scale here. The MACD crossed again from below to above the signal right here. So you would have bought at 300. And right now, you would have sold yesterday. Is that yesterday? No, 2 days ago. You would have sold at 460. So if you follow MACD, you would have done pretty well on that trade. You would have bought at 300 and sold at 460. So you can see why a lot of people like the MACD, because it can show you when a trend is about to form. I will tell you though that MACD is much better at trends than it is at when you're moving sideways. So a lot of times when you're moving sideways, you'll get this choppiness back and forth, and MACD will just kind of chop back and forth, and you'll end up getting in and out and not making any money. It works a lot better when you have breakouts like this. So that's how you use MACD. You want to make sure that your moving average, whatever color you make it, so of course you can change your colors, just like everything else, you can change it. I would leave the settings all standard, but you can change your colors. Instead of histogram, you can make it columns if you like that better. And then you can make your, MACD blue's fine, but you might make it a little bit thicker. And you might make your signal, white or something like that. Red, white, and blue. There you go.
Okay.
Now,
could everyone please mute their microphone, please?
so that's a little bit about MACD. So these are the moving average, the main moving average indicators that I think are important for getting started. You'll see people say, Can you mute your line if you have the child in the background? Okay, so that's a little bit about MACD. And does anybody have any questions about MACD? You can also research and look up MACD. It's a very, very standard indicator used in basically all markets, stocks and commodities, futures, all that. People use MACD. Okay. Now, if you have a particular indicator up and you don't want to close it out, like I don't want to get rid of this, I just set it up, I got my colors right the way I want them. You don't want to close it, because if you close it, then when you reopen it, it's going to be back to the default settings. But you still want to have a full screen. There's a couple things you can do. You can slide this down. That's one way. The other thing that's kind of nice is there's a little, if you put your mouse in the upper right hand corner here, there's a little tiny arrows that pop up, and you can click on that up and down arrow and you can make it full screen, and then you go up and click on that again and you'll get it back. That kind of takes you out of full screen. So we're going to do some lines now. If you do not want to see something on your chart while you're working with drawing, sometimes the other indicators get in your way and you don't want them there when you're doing some drawings. All you have to do is turn them off, the visibility off. So if I want to turn volume off, there's a show hide button right there. I just click show hide, the volume is gone. I didn't delete it, it's still there. I can just turn it on and off the visibility so it's not in my way. I can also turn on and off the moving averages, okay? They're still there. I can turn them back on a little bit later, but for right now, because we're going to draw some support and resistance lines, then I want them away so I have a clean view of what I'm looking at here. When I draw support and resistance, and again, support and resistance are going to be, I believe they should always be completely horizontal lines, okay? If they're not completely horizontal, then they're trend lines, okay? So that's, in my mind, that's the big difference between support and resistance and trend. Support and resistance is going to be directly a horizontal line. Trend lines are going to be at some sort of an angle, some sort of a slope, okay? There's a couple ways. Now, when you look at, there's a couple ways to do this, I guess, easier than other ways. Some people, myself included, it can be challenging to look at candle graphs and really pick the right point for your support and resistance. What I like to do is I like to switch to either line or to bar. And I'll show you, if I switch to line, I feel like this is a lot easier to see for drawing my support and resistance. You can always move it later. When you switch back to candle, if you like that, you can always move your support and resistance later to match it back up if you want. This is showing you your close. Your line chart is only showing you the close point of every day. Okay? In my mind, sometimes it's a little bit easier just to kind of get your support and resistance in if you're looking at the line chart. The other thing that I like to do is I like to start back at a bigger time frame. So I'll go back to a 1 week time frame. And I'll start here, because if you have a trend that, a support and resistance that is pretty important on a weekly time frame, it's going to be very important for a daily or an hourly or 4-hour time frame. So I start at the weekly, and I'm going to come up here to my drawing tools. And the very first one, actually it's the very second one down, kind of looks like a line. If you click to the right, it'll give you some choices. Trend line, trend angle, horizontal line. That's the one I like to use. Horizontal line. I click on that. Now my horizontal line is active. Now I can quickly pick out a very easy one right here, okay? So this is clearly a support and resistance line. Why? Because this point right here, the price came up, hit that point, and went back down. Came up, hit that point, went back down. So that right there is going to be a support and resistance line. I get myself lined up where my crosshairs are right on top of those, and I'm going to click. Okay, I've got my horizontal support and resistance line set. I can, in TradingView, I'm sorry, it's different in Coinigy. In TradingView, it's still active, so I can add other ones too if I want. So let's say I want to come down here and find another one. I'm looking at my crosshairs. I'm looking at my white dotted lines that are moving with my mouse, and I'm looking to see how they line up with some of the points that are on my line graph. In this case here, I see something that is happening right here. I see a point here where the price came down below and then came up to match it right here. And now if I look over to the right, I see that the price came down, went up, came down. So this is some sort of an important area. Don't know much about it yet, but I'm going to put one there just to note it for a little bit later. And then maybe down here, just because this is a low point. So from a weekly perspective, those seem like pretty significant areas for us. Okay, now I want to turn off this indicator, so I can either right-click my mouse or I can hit the escape button, and you can see it's no longer active because it's no longer highlighted up there. I can grab these and move them up and down. So if I feel like I want to reposition one right there, or right there, or right there, I can do that. I can also double-click, and I can set the actual price level. Instead of doing it just by pulling it up and down, I can set it to exactly 155 and say OK. I can also double click on it and change it to a dotted line that is yellow. Okay, so you can decide to have your support and resistance lines look all the same, or you can have them look different based on, oh, I want all of my weekly ones to be a certain color or a certain thickness, and then my daily ones are going to be different, as well. So you can quickly see when you're at a chart. If I have a yellow solid line, this is making this up, but this might be what you decide. If I have a yellow solid line, I know that's a significant support and resistance line because I drew that from the weekly chart. TradingView will remember your last time, the very last setting that you made, and the next time you go and grab that tool, it will use the same setting. So in this case here, it remembered that I did that one yellow, and then the next time I put one up, it'll be yellow. If I change this, whoops, I always forget to turn it off. I hit escape, sorry, to turn it off. I think I put a bunch of them in here. Yeah, I did. I highlight one, I hit delete, it goes away. Delete, delete, delete. Double click to change this to yellow. Okay, so for right now, we're going to make those yellow. Now I'm going to switch over to my, so I'm done with my weekly. Now I'm going to switch over to my daily. This always pops up too when you have a line highlighted. You don't have to double click, by the way. I always double click and change the style here. The other thing you get is you get this little pop-up box, and you can change the color here. You can change the line size. You can do all that from this little pop-up box too, if you like that instead. If you want that pop-up box to go away, you just click anywhere on the chart, deactivate that line, and the pop-up box goes away. So now I'm going to switch back to a daily, and we'll see how our lines look on the daily chart. I'll hit auto, kind of zoom back out. Okay, we can start to see interesting things. That line was where we were at the very top of our close point for 2 different weeks in a row, but yet on the daily, we certainly went over both times. That's very interesting. This line here seems to line up pretty nicely. We've got some price action that came up above the line, came down and hit it. Then we have some price action that went below, came back up and hit it, went back down. So obviously, I think I feel pretty good about this line. This one I'm not so sure about because I think maybe, even though on the weekly, you know, we know that it closed here, the actual support and resistance might be more like up here. So I'm going to move that up there. Here I feel pretty good about this one. This is pretty good. That's a significant point of support right there. We have a point here where the price came up, came back down, touched it, and went back. And then on the way back down, it came back down here, found that point, and then went back up again. So I like that. That's a pretty nice spot right there. I also see that maybe there's another one in here. I can see how my points all kind of line up right along here. So I'm going to grab another horizontal line, and I'm going to pop it in right there. Any questions so far?
No, that's great.
Okay. Now, if we want to even get a little bit more, I guess, precise on our lines, I'm going to switch over to bars. Okay, things look a little bit different now. But here's a trick. I'm going to come up here. Oh, because this is the free version, I'm going to lose my MACD. So for the purpose of this, I'm going to close my MACD. We already talked about it because I need another indicator. And I'm going to, and by the way, if you pay for the paid version of TradingView, you can have as many indicators, and you know they've got all kinds of great toys if you pay for it. I'm going to put in fractals. This is a trick, okay? It's called Williams fractal. And if you do the basic one out of the box, it just gives you these little tiny carrots. I don't like that one as much in TradingView. I actually like, if I type in fractals, where did it go? This one, Williams Fractals Tutorial Template. I kind of like that one better. It's kind of hard to see sometimes, so I have to zoom in. But it gives you a little tiny pointer. What it's actually going to do is it's going to show you the points where A fractal is nothing more than a point where a price turned, okay? So in this case here, we're going to pick on this particular fractal. The preceding closes, or I'm sorry, the preceding high points, the two preceding high points were lower than here, and the two high points after were lower. So it draws in a fractal to tell you that all of the points before, at least the 2 points before and the 2 points after, were both below this point, okay? Does the same thing with underneath. So if we come down here, we can see here's I'll just pick this one. Here's a fractal here. The 2 points before it, the two low points before it, and the two low points after it are all higher than this 1 point. So the fractals will tell you what are some significant levels. Now I can take my support and resistance and try to line them up with where my fractals are. So basically just follow the arrows. Get your support and resistance kind of close to where those arrows are, and you're going to be pretty good because that's where the market turned. Up here, we're going to move our support and resistance somewhere around here. Now these aren't exact. In fact, a lot of times I look at the number and say, oh, we're at 396. I'm just going to make that 400. I'm just going to change this to 400 because I know that 400 is more important to people than 396. We're drawing, significant support and resistance. It's going to be on round numbers. Here I've got one at 279.85. No, I think probably it's more like 280. So I'm going to change this to 280. Zoom out here. Those fractals are hard to see. I might have to go back to the regular Williams fractals. Sorry about moving around on you here. At least they're kind of far away from the actual price bar, but at least they're there. They're a little bit easier to see. Can you see them on your screen, the green and the red little arrows?
Yes.
Okay. So we see some fractals here. Are they important? I'm moving my crosshairs up and down. I'm trying to line things up. I don't know. I might move this one down a little bit, kind of get it lined up, kind of matching up over here, matching up here. Okay, I also see another support and resistance area very clearly has been formed right in here. Okay, so I'm going to grab a new support and resistance, and I'm going to find a spot right in here. I got a bunch of fractals all lined up right in here. So I'm going to put one right in here. It looks like it ended up at 315.36. I'm going to hit escape so that I get out of the drawing thing, and I'm going to double click and make it just 315. So it looks like we clearly had a period of time. There was a breakout, it came back down, settled back in here. There was a breakout down, it came back up, it settled back in here. But generally speaking, there was a nice long period of time where this price was right between 280 and 315. Okay, that was a trading range right in there. Those are going to be very significant levels for the future. If the price falls back down under 400, we should expect that if the price starts to get close to 315, that is going to be probably a pretty significant support point. Because look how many times it was tested over and over again by this price. Tested and tested and tested. That's a strong point. You could maybe make a case that there's another one in here somewhere, maybe up here. If you want to keep drawing these in, you can end up drawing a ton of them in if you want, but it's up to you how many of these you draw in here and how many you think are really significant and how many are not as significant. Now we can switch back to candles and see how it looks. Okay. I feel like we kind of got a pretty good picture here. So hopefully you can see that by switching the way that our price looks from lines to bars and candles and using the fractals, we can kind of use all of those bits of information to get our support and resistance lines in there. Any questions there? Okay. Now we're going to draw a trend line because there is clearly an obvious trend going on here. And I'm talking about a bigger trend long term. In fact, I'm going to make these smaller because they're kind of big and bulky in the way. I'm going to make them kind of thin. Maybe a little bit lighter color. They won't be so much in our face. Okay. Another tool up here is going to be the trend line. Okay. So a trend line, you click one, and then you can move it anywhere you want, and you click a second time, and you've just made a line. 2 points make a line, you're making a line. Now you can grab the other end. Again, you have to hit escape to get out of the drawing tool so that you can then grab it. If you don't hit escape, then you're going to be drawing another line. I've done that a lot of times. Okay, so you can grab the ends and you can move them around and you can start to make sense of things. And this is what I do all the time. I take my line and I start to kind of match it up, and I see that we have a trend. And I think it's pretty clear that it starts somewhere around here. I don't have to get too granular down here in the small stuff. Seems to touch this point here, seems to touch that point there, seems to really kind of touch these points up here, and then I can make it go as long into the future as I want. All I'm doing is taking my line and moving it to make it all kind of touch the bottoms of my prices. You're going to find that trend lines are going to be extremely important because the price action is going to want to follow that trend line. Does anybody see any other trend lines in here? Well, there's one right here, obviously. We can go back in time. Here was a trend. It started up here. Let me move this out of the way. It started up here, and it came down. Now we can kind of move our mouse back and forth. Whoops. See, I didn't hit escape, and I just drew another line. Escape. Delete that one out. Okay. Now I grab this one, and I can kind of move it back and forth. Get it lined up a little bit. All I'm looking at is the tops here. You know, some of them might poke through a little bit. That's okay. You're looking for the overall trend. Now you're going to notice something too. You're going to notice that when we got down to the bottom here of this downtrend, the price kept bouncing up against that trend. Just kept bouncing, kept hitting it, kept hitting it. Then it got down to a support point, and it had to make a decision. Had to make a decision way down here. And the decision was to go lower. And then the bulls said, no, now's the time to buy. It's too good. We're going to start pushing back up. And then it found that support point again. Then they jumped in and said, no, we're going to push it back up. Now, we're still within our trend line. Now I'm going to put volume back up and see what happened here. Watch the volume here. So we're still within our trend line. The very next day, volume went huge. The buyers came out and they broke that trend line right up to the next resistance line. There was some selling. There was some arguing. Bulls and bears arguing back and forth. Volume is high. But it came right down to that same trend line and it didn't go through. it stayed on top. So your downtrend support resistance, see here it's resistance, all of a sudden turned into your support. You also notice that the volume, huge volume on that day to break that trend, was big volume the next day going backwards, but not as big. That's a good sign. There were sellers, but not as many sellers as buyers, more buyers than sellers. The next day, the buyers came out again. Yeah, a little bit less, but the sellers were giving up. They kind of exhausted. The bears were tired. And the bulls came back out and said, all right, we're back in charge now. Pushed it right back up to this support line. Then there was some more consolidation, okay? Volume drops way off. The bulls and bears are tired. They just had a big fight. They're tired. They're waiting. Everybody's sitting back to see what happened. Now, quietly, it pops up above this support line, and it pops below. It's all kind of quiet. But now we've cleared this particular trend line, and now we're starting to kind of consolidate and decide what's going to happen next, okay? So trend lines, you're usually going to see pretty significant movements in volume and price when you break a trend line. Going to see it over here too. Not as pretty. I don't know what happened there. It was kind of an ugly decline, but all the volume came here to support it back up. A little bit different, a little bit of a different one right there. Okay. So trend lines can be drawn on any chart, 1 hour, 4 hour, 15-minute, 1 day. Just remember, trend lines, just like any other line, support resistance line, it's going to be stronger the longer your time frame is. A 1-day trend line, a trend line drawn on a 1-day chart is always going to be much stronger than a trend line drawn on a 1 hour chart. Okay, any questions about trend lines? And do you think that that is a pretty decent way to kind of get your trend lines in?
Yeah, that's excellent. This is a good model for that too.
Okay, now while we're on trend lines, I'm going to show you one other thing. I'm going to delete these for right now. And one thing that I like to do is, if I have a trend line, I like to highlight the line, and I can right click and say clone. And it just copy and paste. That's all it does. And I like to take that cloned version and drag it around and see if maybe there's another. Does that trend line also match up with some prices on the top side? And I'm kind of feeling like it sort of does. I kind of feel like, okay, prices, they touched up here. Sort of looks like maybe down here, price action got a little weird around this point here. Prices certainly came up here, bounced off that, came down, bounced off again, came back down, bounced here. So that's when you end up with a channel. So not only do you have cross channels, prices that go sideways in a channel, you can also have prices that go upwards in a channel. And you usually find some very interesting price action occurs when your horizontal support and resistance and your channel or your trend line support and resistance come together. And that's what happened right here. So if we go back in time, we can see that our support and resistance and our trend line were coming together, and a decision had to be made. Are we going to break down and go underneath our trend line, or are we going to break up and break this resistance line? And ultimately, it decided to break up. Had a nice bit of nice price action right there, above average volume, and then it started making a move. It made it up to the top of the channel, and then all of a sudden, huge volume, relatively huge volume, much more than average, double average, and it broke right through that channel, broke right through the next resistance line of 400, and it just kept going from there. And then it started to settle down. until it started going crazy with Bitcoin going all over the place. So channels are just nothing more than two trend lines, one for a top and one for a bottom, where the price is moving inside of them. If you like, you can use two trend lines to show a channel. Or if you want, let me get my scale done here. There's a tool over here. You had trend line, horizontal line, and there is a parallel channel tool. And I always draw my trend lines first, and then you can just take your parallel channel and you can just put it right over the top of your trend line. You put two, draw a line just like that before, but then you move your mouse up and it's just going to draw a parallel channel for you. And it has a nice, it just makes sure everything's parallel for you. And once you have that drawn, you can delete your previous trend lines because you don't need them anymore. All you really have now is two trend lines. They're just parallel to each other. And you can double click on it and you can change the visibility a little bit. You might not like the colors that they choose. And I want my background not to be so, I want it to be more invisible than that. So you can use the channel tool. Once you kind of get a picture of where your trend line is and maybe you spotted a channel, you can just go grab the channel tool and put that in there. Out in the future, you go way out in the future, you can always grab that, slide it back up here, and always keep an eye back on that point. Make sure that as you're moving it, you don't move it off. You always want to have it touching that bottom point. You can move that channel on up. In the future, what do we expect for Ether? Well, I can tell you, like I said before, not only with moving averages, but also with channels and, with channels and trend lines, market always wants to get back to where it was. And you can see back here, eventually we broke out of this channel, we came up, we came back down, we got back into our channel. It's very likely that we could move sideways for a little while and get back into this channel, or we could be a little more violent, come back down and test this support and resistance again at 400 and maybe pop back into this channel again somewhere around here. And that would be a very logical thing for it to do. We have a long-term channel. I would say the long-term prospect for Ethereum is pretty good. Barring any sort of bad news comes out, I think that this channel itself is probably a pretty good channel. It's just that I think we've gotten a little overheated, maybe a little overexcited, and maybe we're going to, see things pop back into this channel. Hopefully it's not as violent. Hopefully it kind of slides in sideways and maybe picks up again like this. Any questions there?
No, that's excellent.
Okay, now one last thing I wanted to touch on was wedges and triangles, because they can be also very important. And I'm going to get rid of this channel for right now because it's going to get in the way of my drawing my wedge. So I can do a couple things, by the way, and this is, I guess, pretty good to show you for TradingView. Over here, you have the ability to hide all of your drawing tools. So not only can you hide your moving averages, oh, by the way, I can put those back in and see how they match up with my, oh, look at that, my moving averages fall inside my channel. That's pretty interesting, isn't it? So you put all the pieces together and you start to kind of be able to figure out what's going on here. If I break that 21-day resistance, am I going to fall back into that channel? That channel matches up exactly with my 400-day support line. That's a very real possibility. If I break through there, it's very really quite a possibility that I've got quite a bit of support right here already built, pre-built right into my chart. I could see prices come in right into the space right here. What happens after that, I'm not sure. You'd have to kind of take a look at the market at that point. Does it bounce back up? Does it slide in sideways? Does it break down violently? Knowing crypto, it's going to break in violently, but who knows, right?
When you're using this as a tool, I'm sorry, like what you just said, where you're deciding if it's going to break through and what trends are going to happen after that, do you more narrowly focus on a 15-minute candle, or do you still stick with like an hour to determine what's going to happen at that exact point?
Oh, I'm only looking at the 1 hour, the 15-minute when I'm looking at making a trade, just to make sure that I'm getting in at a point that's not overly volatile and overly concerning to me. When I'm deciding where I think a particular, security commodity is going to be in the future, I'm only worried about daily. That's just me. That's just my mindset. Because I'm not a day trader. A day trader is going to be looking at the hourly or the 4 hour for their, for their signals. Because they're going to be looking to get in and out in a day or two. Me, I'm looking at daily, weekly. I'm not looking to trade more than I want to buy something and hold it for days and weeks, not for hours.
Great, thank you.
Yeah. Okay, so we have all of our indicators in. We've got our moving averages, we've got our channels, and we've got our horizontal trend lines, support and resistance lines. If we want them to go away, there's a little hide all drawing tools over here. It's kind of like a total, hide everything. You can see it goes away. That's just the drawing tools. Our moving averages are still there. If we want to get rid of those in terms of hide them, we still have to come up here. So anything we drew, this is your drawing center over here, we can hide or we can show. So you can kind of get rid of it if it's in your way and you want to look at something and not have all those lines in your way, or you can put it back up. The other thing you can do is you can hide in one individual thing you drew, you can hide it. You can right click on it and you can hide. It didn't go away. You didn't lose the work you put in to get that in there, but getting it back is not as easy. You actually have to come to this little layers objects tree button down here, and you have to find it. Oh, I'm sorry. I've got a lot of saved charts. Coinbase, Ether. Oh, this is the object tree for this particular one. Sorry. You go to objects tree for this particular chart you're on, and you can see parallel channel is hidden. So you can hide individual ones, but you got to remember to come over to this little objects tree button to unhide it. And then I've got it back. So that can be a little bit confusing to people sometimes, is how do I get it back if I hit it? You have to come back over to this objects tree, and you have to click on the objects tree, and you have to unhide it from here. So in this objects tree, you can hide or delete or get rid of anything right in here. So I can, if I hit the delete here, I would get rid of that horizontal line, which I wouldn't do because I don't know which horizontal line that is. It doesn't tell me. So anyway, so I'm going to hide this channel because I want to talk about, and I'm going to hide my moving averages right now. The last thing I want to talk about is spotting some wedges and points of consolidation. So when you start to see, I guess I would call it the inchworm, and I'm looking right here. I see this kind of this humpback thing right here, this inchworm. Let me hide this. I see a big movement. I see a big movement up. I see a big movement down. I see something here. Then I see a hump up. I see a hump down. I kind of call that the inchworm. It kind of reminds me of an inchworm moving along. I start to think about wedges. And usually if you see a cycle where a price goes through a down and then an up and then a down, but it's doing it the high and the low, and the next high is smaller, the next low is smaller, and then it's kind of wiggling its way in. That's where you're going to find your wedges. Now, a couple other ways to find your wedges is to start drawing trend lines. So I might decide to draw a trend line from here down to here and see if that lines up. Let's see. Let's get these to line up. Okay. And then I might come down here and say, that line kind of sort of goes up to there. That looks pretty good. Does it also, shoot, sorry, let me get rid of that. Does that line also match down? It sure does. In fact, that's our trend line. That's our channel line that we drew earlier. Okay, that's starting to look like a wedge being kind of like this point here coming down, this point here coming up. A wedge is where you're going to create a decision point. The tip of that wedge is when a decision has to be made and something's going to have to happen, okay? You're usually almost never going to see a price just sort of keep going straight to the right. When you get to the bottom of a wedge, and you can see I have a trend coming down and a trend going up, you're going to see it fall to the bottom or to the top. Now, you don't know which. That's the problem with wedges. Wedges can break to the bottom or they can break to the top, but it's going to break somewhere. You might have to find some other ways to get comfortable with, is it going to go up or down? But trend lines are great ways to find wedges because you start kind of putting your pieces together from here to here to here. That looks reasonable. From here to here to here, that looks reasonable. Oh, look, they come together at a point. Okay. Is there another trend line that makes sense in here? So we'll grab our trend line, start one up here. Does that make sense? Not really. Does one go over here? Not really. So this is what I do. I just sort of grab these lines and just try to find things that make sense. Well, that made sense. We drew that one earlier. I could leave that there and say, well, that made sense. But this is the one that I think is interesting, and I see it when you see this little hump that comes here in the middle. Now, there's a very cool tool that will help you with wedges. I'm going to delete these lines and come over here because I love this tool. It's called the triangle tool. And it's under this one that looks like, I don't know, it's like 4, 5 little boxes or whatever that is. And you come down here to triangle pattern. Okay. Triangle pattern wants 4 points. The first point is going to be your high point up here. Your second point is going to be your very next immediate lowest point, way down here. That's point B. Your point C is going to be your next high point. That's going to be over here. And your point D is going to be your next low point, right here. All right, well, that sort of doesn't look right. Okay, let's play with our points a little bit. We're just going to move them around. Let's move that up. Let's move that here. Let's move our C down. What we're trying to do here is find a way to get this to line up with our price action. Now we're starting to get close. You can start by clicking on the tops of the price wicks. You can move it in. All you're trying to do is move your wedge to the point where you see the price action inside the wedge is lining up with your edges of your wedge. Okay, this is pretty good. Now, had I drawn this wedge, let's see. That's pretty good. Had I drawn this wedge way back here and said, well, we're getting close to the end of the wedge, what's going to happen? You now know that you have a price that has gone way down, it's gone way up, it's kind of wiggled its way in, now it's working its way to the nose of the wedge. Something's going to have to happen before it gets to the end of that wedge. Usually, normally in a well-formed wedge, you're going to find a support and resistance horizontal line right down the nose of that wedge, right down the middle. And I'm going to grab a little trend line here. And I'm going to stick it at the nose. I'm going to draw it backwards. I'm going to change the color here just so I can see it. I'll make it yellow and dotted. Usually, I have found well-formed wedges sort of line up right down the middle. You can see the price kind of uses this line here as a support line. You know, somewhere in there you can kind of tell that there is a support and resistance area. And you can see that our wedge nose lines right up with that support. Now that's not going to happen every time, but your really well-formed wedges usually have a support and resistance line that goes right down the middle of them. Now your next question is, well, what's going to happen when we get to the end of this wedge? Because you might be back here a few days. You might have identified a wedge, and you might have noticed, well, we're getting to the end of the wedge. What's going to happen? You can even pinpoint, something's going to happen. It might be back here on, you look way down here, this is November 3rd. You might say the wedge, the nose of the wedge is all the way out at November 14th. So sometime between November 3rd and November 14th, something's going to happen. Okay, November 3rd, well, it's not going to probably go all the way out to November 14th. Let's say it's going to come back a few days to the 10th. So sometime between now and the 10th, something's going to happen. And sure enough, it did. On a pretty high volume day, my volume's kind of small down at the bottom here. On a pretty high volume day, much higher than average, my volume was 229,000 and my average was 98,000. So we were 2.5 times average. We popped out the nose of that wedge. The next day we popped over a long-standing support and resistance at 315. Then we came back down, actually touched into the wedge again, even touched that support and resistance at the middle of the wedge. And that's when you kind of get a little nervous because you think you found a breakout. But then you turn around and the next day it found buyer support again, and off to the races it went. So a lot of times wedges will be areas where you'll find breakouts. As soon as you see a price start to wiggle its way to the end of a wedge, you're going to see a breakout. We just saw this happen in substrantum sub, and I was posting a couple days ago about how we were getting to the end of a wedge. And basically, what happened in the end was it popped out the nose of the wedge, it went up, which was great to see, and then with Bitcoin's massive rise over the last couple of days, it sunk. So it was a failed breakout. It actually went up, and then it curled right back down. So not all breakouts work out in your favor, but wedges can kind of tell you when something might happen. Well, not might. In almost every case, a wedge is something's going to happen. If you drew your wedge correctly, something's going to happen. Change is going to occur. Now, you just don't know if it's going to be down or up. That's the problem with a wedge. You don't know if it's going to go down or up. It's going to happen, though. Rarely are you going to see a price just keep going. It's going to violently break out. So that's a little bit about wedges. Bonus content. We've been going for a while here. Is there any questions on that?
No, it's excellent.
So yeah, again, this was intended to be more of a real kind of basics and just finding these things. I hope I clarified some of those questions for you. Ultimately, what we're going to do is we're going to be looking for how did the price behave over time, and finding the points where the price met that support and resistance, and drawing those in so that in the future we're going to use those lines. Those lines will still be important next year. Those lines will be important 2 years from now. If that price comes back down, you're going to see, let's say this goes up to 1,000 and then comes back down 18 months from now, that support and resistance line will still be important. It's not going to go away.
About saving after you've done all this, and like you said, you want to refer back to it in 6 months.
Yes. So very good. So up here in the upper right-hand corner, if you click on this, actually, if you don't have anything saved, you're going to have this little cloud with a save button. Okay. Now this is a saved chart, so I'm going to click over here to say save as. If you don't have a chart saved yet, and you're not going to see this right here, you're just going to see this button. You're going to click that, and it asks you for a chart name. In this case, I'm going to do save as, and I'm going to save this as, I call it ETH USD, and I put a colon, and I call it Coinbase. That way I know I'm looking at Ether, US dollar on Coinbase, and I click Save. No thanks. Not right now. Now, I can load that chart. Oh, it didn't save one. Oh, I can't. I can only have one chart layout. Shoot. Sorry. I'm so used to using Coinigy. Apparently, I can only have one chart layout saved. So this is a layout that I like. I called it Mountaineer. I'm going to click Save. Now, here's what I'm going to tell you. If I go over and change to a different thing, so let's go to Bitcoin, US dollar on Bitfinex. What's it doing right now? 15,000. Okay. If I make some changes here, I draw a line here and I draw a line here, and I click Save, that's saved. If I go over to sub, they don't have sub in there. If I go to Litecoin, US dollar on Litecoin, Bitcoin, Litecoin versus Bitcoin on Poloniex, however you say it, and I draw some sort of great looking channel here, and I click Save. So anytime you make a change to any particular chart, you can hit Save up here, the little Save to Cloud, and then you will it will save your chart there. And when you refer back to it, we can go back to the Bitcoin one we just did on Bitfinex. Where was that one? Here. And those two X's that I drew are still there. They didn't go anywhere. And we can go back to Ether, USD on Coinbase, and all the work we've been working on is still there. So that's your little save button right there. Also, over here, there's a little sidebar. There was a little tiny button over here I clicked. You can sort of barely see that little triangle. There's a little sidebar. You can have a watch list. So I have in here a lot of different coins that I might want to be watching, okay? And I can click between them. So I can say, what's going on with my current favorite coin, okay? I don't even think I have it in this one right now. If they have NXT. So what's going on with NXT on Bitcoin right now? So I added it to my watch list. It's down at the bottom probably, or is it in? Here it is, showed up right here. I just click on it and the chart shows up, okay? Whoops, didn't mean to draw that line. Now I want to draw something. I just draw my lines. Oh, I spotted a trend. Great. I draw my line and I click Save. That's always there for me. And I can go back and forth, click on my other watch list items, and I can come back and that's there, saved for me. By the way, NXT has been a trooper. Look at it, it's just hanging in there with Bitcoin going through all of its gyrations. It's just went through a breakout and it's just hanging in there. Does that help on the saving aspect?
Yeah, since you have so many different ones for each save, what's the point of saving multiple different charts?
Those are chart layouts. Sorry. I have one chart layout, but you might have different chart layouts. You might like to look at charts different ways. You might want to look at, Ichimoku, and you might want to look at more standard moving averages. You might want to have multiple chart layouts, meaning I want to look at all of my Ichimoku on white charts with bars, and I don't want to have any other indicators on the screen. So you would switch to that chart layout. TradingView would let you have multiple different layouts that you can choose from. but in the free version, they only let you have one layout. So in this case here, for just getting started, you're going to get yourself set up with just some moving averages, put in some fractals, and put in your moving, or your MACD if you want, and save it. And then you can put in your watch list the symbols that you want to keep an eye on, and then you can just flip around from back and forth between each of them, and then you're going to constantly be in the same, you're going to have the same setup with your colors and your indicators all the same from one to the next.
Okay.
The lines and the drawings are all saved whenever you save, when you click that save button, that little cloud save button there. Okay. Is that about it?
Yeah, this was fantastic. Thank you so much.
Well, good. All right. I think we'll end it at this point. You know, it's the first time I've done this, so if we have further questions, you can, anybody that's watching this now or in the future can go to the patron channel and ask your questions there, and I'll post this link up so that people can, I'll figure out how to post it so people can watch it after the fact. So thank you very much. I really appreciate everybody taking the time, and good luck out there. And if you find something interesting, post it in the DataDash community. We'll see you for now. Thank you.
Thank you so much.
Thank you, man.